інноваційних компаній. Ми вчора мали приємність підписати партнерський агрімент з Міжнародною фінансовою корпорацією AFC, і в тому числі один з компонент нашої співпраці – це допомога побудови приватно-публічного діалогу по впровадженню в Україні Open Banking і Open API як стандартів, так і регуляцій, які з цим пов'язані. Зокрема, ми будемо працювати над створенням такого API-хабу, так, ось, і для того, щоб ми всі краще розуміли, що це, які переваги це надає. Ми також з колегами з Міжнародної фінансової корпорації підготуємо і представимо ринку серію таких от вебінарів, які пояснять, що таке Open Banking, які є види регуляції, які стандарти, які бізнес-моделі, які переваги надавачів API, які переваги користувачів API, як це все працює. У нас буде сьогодні один з таких кращих спікерів Міжнародної фінансової корпорації на тему Open Banking, це пан Джозе Морено. Ось, і протягом цих двох семінарів сьогодні і завтра він поділиться своїм досвідом, кращими практиками. Давайте поступимо структуру наступним чином. Тобто ми не будемо перебивати спікера в рамках його доповіді. Значить, питання пізніше в кінці, це буде 2 години у нас така доповідь, ви можете написати, ми спробуємо на них відповісти. Якщо не будемо встигати, то відповімо письмово. І в кінці цього семінару ми пришлемо ссылку на такий Google Sheet, тобто прохання буде заповнити цю форму, ось, для того, щоб ми могли вас запрошувати напряму на наступні ці семінари, вебінари, які будуть відбуватися в рамках нашої співпраці з Міжнародною фінансовою корпорацією. Дякую всім. Jose, the floor is yours. So, welcome in our first seminar. So please start.
Thank you very much, Rostislav. So, welcome everybody to this first webinar about open banking. We will be having another one tomorrow related to business models, whereas today we will focus on regulation. So the agenda for today, we will be covering 5 items: technology disruption, what is open banking, what is the open banking regulatory approaches that has been happening around the world, what is the open banking canvas that we use in order to facilitate the dialogue with stakeholders, especially with the regulator. And we will finalize with the roadmap to implement open banking. At the end of the session, we will have a Q&A participatory session that can last, I would presume, for at least 30 minutes. So I will try to present in 1 hour and a half. If I can do it in less, I will try to, but there is a lot of content that I would like to cover. So the first part is the technology disruption in banking. There are some disruptive technologies that we need to look into in the short term that everybody is watching. If you see in the chart, we're talking about hybrid cloud, which is essentially a computing environment that use both on-premise and cloud infrastructure in order to provide banking services. API platforms that we will be supporting the association in designing an API platform. It actually embraces all sort of APIs and publish them in order to integrate with third-party providers. Robotics process automation, RPA, is also something which is very hot in the marketplace, especially for financial institutions where they use different software or robots to emulate and integrate the actions that would otherwise be done by a human being. And finally, instant payments. Instant payments, as you know, is the new way to exchange money, and it's going to be de facto the standard in the near future. Just to give you a flavor, today in the Netherlands, transfers are actually executed via instant payment systems. So let me walk you through, and I will try to launch a video on YouTube to see how could the future financial services industry look like.
If there are billions of conversations happening every minute, imagine how many times your bank must have been talked about while you finish watching this video. Each conversation is a business moment for you to create a memorable experience for your customers that they would want to share with others. Envision the world's future, from smartphone to a smarter phone, from a car with a driver to a car without a driver. Future is the next present, where our imagination today has become Lisa's fully automated banking experience in 2020. While Lisa is sleeping, her phone receives a notification regarding the shipment, which is ready with the exporter. The intelligent software checks for funds and notifies her bank that she would need a letter of credit. Understanding an urgent change in schedule, her phone automatically resets the alarm for 7 a.m. so that she can plan her day. By the time Lisa is ready to go, her smartwatch receives a notification that her black vehicle is low on fuel and suggests that she drives the red car. The GPS selects the shortest route, and Lisa arrives the New Age Bank's intelligent branch sharp at 9. From the moment Lisa arrives at the bank's special branch with no staff at all, the door installed with intelligent communicator scans Lisa to notify the bank about her arrival.
Okay, all right. So I will leave it here, and I will continue with the presentation. I believe is a bandwidth problem. Okay, so if we continue with what is open banking, I will try to shortly, in a few words, define that this is a brand new, secure way for customers, including small businesses, to share information, allowing new and existing companies to offer super fast payment methods and innovative banking products. We believe that this has the power to revolutionize the way we move, manage, and make more of our money. According to Accenture, by last year, European banks that would be exploiting open banking to become digital leaders can actually generate up to 20% of their lending revenue pool through open banking. 21% of their current account can become from, again, from open banking. 17% of payments can also be vehicled through open banking. And finally, 12% of retail investments can be also conducted through open banking. I was going to share with you an open banking video. This is a very short one. It has text. So this time I'm glad to launch it, because even if we don't hear the voice, at least we can see what the images are doing with the text below.
In 2016, the Competition and Markets Authority published a report about banking. It found that older established banks didn't have for customers.
So we cannot see it. No. We can only hear, but we don't see it.
All right. Well, it looks like we have a bandwidth problem. So I will not do these kind of things anymore.
Maybe you can share the link into the chat and participants can watch it later. Yes,
the presentation has the link. Okay, so let me give you some more additional insights. In the old times, before open banking existed, you would typically, as a customer, interact with your bank account through either internet banking or through your mobile application. Today, this has changed, and essentially, the big difference is that we have multi-channels, not only internet banking or mobile banking. We can also benefit from interactive and smart ATMs and some other technological advances. The big difference, though, is that we can access our bank account through a third-party provider. That third-party provider is a new player that is actually initiating payments on our behalf, or comparing accounts on our behalf, or conducting different value-added services that we can benefit from. This is why there is a strong motivation for financial institutions to allow access to these TTP or third-party providers in order to get access to individual or business customer data, to get access to different banking services in a machine-readable format after, and this is very important, the client provides consent. Why now open banking? Well, the first thing is that customers expect it. This can change depending on the market, but for example, in the European market, at least 33% of digitally active customers worldwide use at least 2 fintech services. In the UK alone, the open banking market could be worth more than 8.2 billion euros by 2022. So this is good for banks. It is a very mature technology. APIs technology has been around for a few number of years so far, and regulators want it. As you know, this was started in the UK, then it went throughout Europe, and we will see later that this is an unstoppable initiative in many countries, including Ukraine, as we will see later. In terms of benefits for banks and users, there are different ones. The first is that there are new business models and revenue streams. The second one is that there are new distribution channels. We can also outsource research and development and innovative promotion for our own products. We can partner with others in order to develop innovative products. We can rationalize and control over who access our resources. And finally, we can have a much more flexibility when it comes to internal and also external APIs. What has been the evolution? Essentially, we have gone from data sharing to what we term as APlfication. So data sharing in the early days was about aggregating all or one financial accounts into one dashboard in order to get, for example, seamless payments, or in order to get a mortgage comparison tools. This has implication because third parties would add value through the delivery of different financial services that can now be unbundled and offered by non-bank third parties. This is the case of fintech firms. These third-party providers can also create new services, and this is what the innovation component comes into play, because we are adding things that has not been necessarily offered by banks before, like tax preparers, accountants, financial advisors. All these come into play and can be offered by different banking institutions. And last but not least important is API access to data. So essentially, as I said before, bank needs to provide customer needs to provide permission to third-party firms in order to access the information of their accounts. Third parties needs to engage with service data aggregators, and the practice of, for example, screen scrapping, etc., is evolving towards methods that are tokenized through APIs. So Essentially, data privacy is critical, and this is something that all regulators and supranational institutions, like, for example, the Bank for International Settlements, is looking very closely in order to protect customer rights with open banking. Let us now focus on what are the open banking regulatory approaches. As you can see here in this chart, there are different types of banking data and activities, and the approach is very different. In the case of Australia and the European Union, it is mandated. The European Union, as you know, it only focuses on either payment initiation, as it is called here, fund transfers, or account information. Whereas in Australia, it doesn't apply for fund transfer, but it does for product information and account information. Hong Kong, on the contrary, is actually allowing all sorts of different banking and data activities, from product information to payments, and the same is Singapore. The big difference, though, is that Hong Kong has a more, let's say, government-oriented framework, whereas Singapore does not mandate. It only suggests through, I believe you know, through an API guidelines. There's a very interesting playbook that has been published by the Singapore Monetary Authority in this regard. And then we have China or Argentina or even the US that are purely market-driven partnerships. In other words, it needs to be left to the market entirely. There is no mandated obligation from the regulator to open up customer data or account data for third parties to access this kind of data to provide new financial services. There are many stages in this regulatory path. Let me give you one flavor. Country approaches have pros and cons. As I mentioned before, there are countries that are purely market-driven approach, and they require very few requirements in order to observe data-driven financial services, whereas in other jurisdictions, they do have a more defined open banking framework, which do have the benefit on the efficiencies of having a clear and consistent expectations about the standards. In this case, the UK is a very good example of a country where not only has mandated open APIs, but has also set up a company called OBIE in order to facilitate the standard definition. Whereas, as you know, in the European Union, this has been left to the stakeholders, and the Berlin Group is the most renowned standard setting for open banking in the European Union. Open banking also has variable scopes. As I mentioned before, some frameworks such as the European Union apply only to specific types of data, essentially payments processing data, which allows third parties to read and write. And this is very important, because if they would not have rights, they would not be able to initiate payments. On the other side of this spectrum, we would have Australia, which only provides read-only rights for data aggregation purposes. So there is no way to initiate a payment as of today in Australia. And then, very important, as I mentioned before, data privacy laws are the foundation of this new way of doing banking. Many jurisdictions update or plan to update the privacy laws. This is the case, for example, of Ukraine. These privacy laws in other jurisdictions are anchored in the principle that customer owns their data. And this is very important because there are some countries where they believe that the data is actually not owned by the customer, but rather by the bank, which is the view of some other countries. Still in the European Union, on the whole thing about open banking is that the customer is the one who owns their own data. And finally, we believe that there should be some regulatory coordination in order to facilitate the different inconsistencies that may come across in different countries. This is not the case of the European Union because, as you know, 27 countries are under the same umbrella in terms of regulatory environment, but maybe countries like Ukraine or other neighboring countries, you may want to have, at least at governmental level, some sort of coordination, for example, for cross-border transfers that could apply some kind of open banking, or especially if Ukraine wants to get accession to the European Union in the future, these kind of coordination with European authorities will be most advisable. Now let's have a look at what is happening around the world. In this world map, you see that there are 3 different stages. Either they're fully implemented, this is in dark blue. These countries are essentially Australia, India, the European Union, Turkey, and also Mexico. Mexico launched in 2018 a very unique in the world, I would say, fintech law, which they dealt with not only fintech related aspects, but specifically also with open banking. And then you have countries where there is no regulation, but there is a forcing model. This would be the case, for example, of China or Canada or Colombia, Brazil, Chile, Argentina, etc. And finally, there are countries where there is no regulations, but there are at least standards available as of now. This is the case of Nigeria. This is the case of the Russian Federation, Indonesia, etc. Please do bear in mind that this world map is not fully updated. This was actually retrieved and from a project in another country that we did last year. So it's at least a year old. But it can give you a flavor that the bottom line is essentially that there are a lot of interest. There is a lot of interest from all around the world to facilitate open banking. And the only difference, though, is that the approaches are from, as I said, fully mandatory to market-driven. Now, let's focus on what are the risks and the challenges that any institution may face when implementing open banking. The first one is adapting business models. As you know, the banking industry is extremely traditional, conservative. So the fact that there is an increased competition and there is a potential loss of revenues and deposits to new competitors, especially fintechs, make them a little bit wary. But this is just a challenge for them, and there is no risk whatsoever. It's just a question of increasing competition, which at the end of the day will benefit ultimately the consumer. The other big challenge is around data and cybersecurity. As we mentioned before, data is collected by these trusted third parties, and these data could potentially be stolen and compromised. The more data is shared with more parties, the possibility of a data breach obviously increases. So here there should be all sorts of safeguards in order to protect these data. Also, there are time and cost constraints in order to maintain APIs. As we know, and we will see later tomorrow, APIs provide advantages for third parties, including improvement of efficiency, standardization, etc. But obviously, this takes time and cost to build. So there must be some kind of a trade-off between this cost and the potential revenues that either third parties or financial institutions will get from these APIs. Then the penultimate challenge is the oversight of third parties that can be limited. This is typically happening in countries where standards for data transmission, etc., and requirements for banks requires supervisory requirements to be applied to banks and not necessarily to non-bank third parties. This is something that is essentially being addressed by many jurisdictions in order to avoid this kind of arbitrage between non-banking regulation and banking regulation. And finally, and we will see it later, the assignation of liability in the event of a financial loss. Here the question is, how do we assign liability? To what amount are determined to customers, if there is any?
Да, я поняла. Print screen.
So let us now focus on the open banking canvas. As I mentioned before, this is something that we use in order to facilitate the dialogue with the stakeholders. Let me show you what I'm talking about. This open banking canvas deals with all these aspects: enforceability, liability, standardization, reciprocity between banks and non-banks. What are the targets, third-party providers, i.e. what are the third-party, what are the fintechs that can be under the scope of open banking? How do we actually onboard fintechs? What is the risk management considerations that we need to take into account? What is the scope of services and the data types that we need to look into? What is the governance model that we need to apply? What is the implementation path that, in this case, Ukraine wants to take in order to implement open banking? What are the target banks? Can we have all banks mandated, or shall we just include the significantly important banks for the market? What are the AML and CFT consideration? What are the regulatory context? How do we monetize open banking? And also, and very important too, is how do we fund this whole project? Is it funded by the government? Is it funded by donors? Is it funded by the banking industry? Is it also funded by the FinTech Association? These questions need to be addressed. And finally, the regulatory oversight. So this is what we put in front of the regulator. This is what we also wanted to share with you today, because there are aspects that obviously you need to make a stance when you engage with the dialogue with the MBU and or the regulatory parties in order to establish the perimeter of obligations, rights, etc., etc. So let me focus now on each of these components, and let's try to look into what are the questions that anybody dealing with open banking should be answering. There are 5 pages now to come, which can be complex. I will try to walk through them. I understand that this can be a little bit hard with so much text, but this is important. I will focus on the key questions only. In terms of enforceability, the first one is what kind of regime is it going to be legally mandated? What cases, who enforce it? Is it the MBU? Is it another agency? Are the tribunals and the courts of justice who needs to force this mandate? Yes or no? In terms of compliance, is it done on a voluntary basis, or is it left to the market? Or do we have a mandatory approach? As you can see, just this decision about enforceability, is it mandated, yes or no, actually has a tremendous impact on all other dimensions. For instance, liability. Again, we raised this question earlier in the prior page. What happens in case of fraud? What happens in case of data breach? Is it the law clear in terms of whether financial institutions who takes appropriate security measures, are they technically not liable for any data loss? Is this then transfer to the fintech? Yes or no? How is this liability going to be solved? Is it by data protection, data reception regulation? Is it by setting up obligations to regulated institutions only, or private safeguards? Can we rely, for example, liability just in the consent and the freedom between the two stakeholders, for example, the fintech and the bank, in order to establish what kind of liability, or the liability is fully mandated within the framework of the law? These are very important questions. Another one is about reciprocity. Essentially is, do we require reciprocity? Reciprocity means that if I am opening up my data, shall I also require you to open up your data? So there is a bilateral equal relationship between the two parties. If there is reciprocity, do we have a special degree? Or is this something that depends on MBU policy objectives? Or do we implement data sharing framework to solve this issue? This is something, these data sharing frameworks is usually what happens in many jurisdictions. And this is possibly the way to go. In terms of standardization, do we have a common data model? Who defines it? Is it defined wholly by the regulator, or conversely, the FinTech Association needs to step in? Because it's not the same defining as imposing. And when you say defining, you can co-create, you can co-define these standards. And who decides to standard, what to standard, and what can be left to the market? Again, these are very important questions for all of you that, that will surely impact your business in the years to come. Let's move on. What happens with target fintechs? What are the third-party actors that can use these APIs? Is there anybody that cannot be allowed to play? If that is the case, on what terms and conditions? Can a bank or a big tech access the APIs? What should they give in return? In terms of onboarding, and this is very crucial for you, is what would be the process for vetting you to access the data? Is it a licensing process? Is it an authorization process, etc., etc.? Is that access fintech friendly in terms of not imposing overly requirements that are costly for you and they are almost impossible to fulfill? How is this information about vetted partners shared within participating financial institutions? Do they have in the banking association some kind of single point of contact that will be dealing with fintechs? Yes or no? These are, as you can see, very important questions. In terms of risk management, how is security handled? Is there any security standard in place? How do we do authentication? As you know, in the European Union, we are actually mandating at least a two-factor authentication in order to process any payment. What happens with personal data? What are the boundaries for storage data? What are the boundaries for processing this data? Are there any safeguards in place to guarantee data protection? Again, if anything goes wrong, who is liable? Many of these things related to data obviously will be either be dealt with by data protection laws, some others by the new, as you know, upcoming payments law of Ukraine, which is under discussion, second reading in the Rada, if I'm not too mistaken. Another word of caution here, there might be things that are not being dealt with by the payments law, and they make express reference to data protection laws. In other cases, it could be the case that the data protection laws are being affected by the payments systems law, in which case those data protection laws might need to be updated or amended in some way or another. Another crucial aspect is the scope of services and what data types are we talking about. The first thing is what kind of services can be open to third parties. Typically, as you know, in the European Union, the basic ones are account data services and payment initiation services. But obviously there are a host of other services that can be very valuable for customers and also for financial institutions, like, for example, any internal process like credit scoring, which they could be using, for example, alternative data sets for getting more insights about the creditworthiness of a customer. This would be, for example, the case of leveraging not only socioeconomic data available from the Institute of Statistics or credit bureau transaction history, but also things like data from telco companies, data from other institutions, like, for example, supermarkets, etc., that can provide a pattern of consumer habits that can be interesting for the bank in order to provide a credit. So this is, in a nutshell, things that we need to take into consideration when it comes to the scope of services. In terms of governance, again, are we going to make up these open service data via a common interface? Or is each institution required to devise its own interfaces? Or are we going to set up some kind of open API marketplace for this particular purpose? What are the technical specifications? Again, this is something that would most likely require your involvement as associates of the financial, the FinTech Association. Who decides about these interfaces requirements? Who are the third-party providers that are involved in this process? Is it all of you, or do you provide some kind of mandate to some representatives to act on your behalf when you deal with talks with the government, with the MBU, etc.? Is the government entrusted to a separate entity? Again, this is the case, for example, of the UK or the European Union. In the case of the European Union is the ABA, the European Banking Association. In the case of the UK, it was, until very recently, the OBA, which is the Open Banking Implementation Entity. Dealing with implementation precisely, there is this thing about the pace. Let me give you here just one piece of advice. I think we need to make sure that the implementation pace is realistic, that we do not try to be too ambitious, because the implementation of open banking is something which is complex. So we need to be prepared for let's say, piloting, define a time lapse which is reasonable, and then prepare and plan for full implementation. Usually this is done on a phased approach, distinguishing between obligated entities, type of services under scope, and then later non-obligated entities can come into play if they so wish, in order to open their customer data in the case of the banks, and obviously third-party providers that that will be able to provide their services. Going down the line, in terms of target banks, I have already mentioned this. What kind of institutions actually are the target for open banking regime? As I mentioned before, there are different approaches. In the UK, it's only the 9 largest banks, whereas in the European Union, there are more than 6,000 mandated banks already providing some kind of open banking services. Again, what kind of criteria? If we decide to limit the number of target banks, is it by size? Is it by line of business? There are many ways to do this. Is because they are already deemed by competition authorities as systematically important banks, etc., etc. Another very interesting aspect is AML and CFT. In terms of money laundering and counter financing of terrorism, how are we going to get our customers onboarded to comply with existing KYC rules? Is there any way, for example, to change KYC rules to allow remote KYC today? If so, which is the case, with what kind of technology, etc., etc. What kind of enhancement then should the IT systems need to cope in order to make this possible, especially when we do transaction monitoring and there is, for example, the instant payment system already set up in the country, then the systems that we need to put into play for monitoring transactions needs to be a very fast and very, I would say, ad hoc ones for instant payments. Regulatory context, I'm not going to focus on this, because this is something that applies more for regulator. In essence, as I said before, this is about how we harmonize our existing legislation with our valuable trading partners. In this case, this could be some ex-former Soviet Union countries and the European Union countries. This is for the regulator to decide. And finally, I mentioned this earlier, what happens with the funding? This is something that costs money. So who will fund the creation and the maintenance of these standards? Is it the MBU? Is it you guys, the FinTech Association? Is it the Bank Association of Ukraine? Do we do as in the UK, set up a special implementation company? Would each participant, based in criteria such as market size or expected usage, be mandated to proportionally fund these according to these data, for example, market size or revenues, etc. In terms of a monetization, again, as you know, usually APIs are given for free. If they're not, if there is some revenue sharing, how do we do this? There are many ways. We will be discussing some of the revenue models tomorrow in the next webinar. And finally, the regulatory oversight. This is something that that is critical for us to see. There is a typo here. I should not say it. CBAR is to say the MBU, who will be overseeing the program. What are the monitoring and control mechanisms that will ensure that both banks and third-party companies are continuously compliant? And how can we lodge complaints? We will see all these later on in the last slide of my presentation when we deal with the implementation of the different stages in the roadmap. So this is exactly what I mentioned. So let me just give you a flavor of this. In terms of open banking roadmap, this is an example for banks. It's totally illustrative, but you know, banks should move from a traditional banking approach where they lack a vision on digital capabilities, digital strategy, no APIs are coming into play, into a more defined digital strategy in which the process of implementation requires a very thought through digital transformation process with planning, and internal APIs are being now considered and implemented. And then when it comes to open banking, the first thing that banks will most likely try to do is to discover open banking. So senior bank managers now understand what are the opportunities, what open banking implies. Existing APIs are now actually internal and are very heavily used and consumed. Then they will design an open banking strategy where the bank develops not only this strategy, but also open APIs are defined following this strategy. They are categorized in different ways because they want to cope for different customer segments. Then they will experiment with open banking. They will test those APIs in a safe and controlled environment. This could be with a limited pilot. This could be done with a regulatory sandbox, as you may know. And finally, there will be the implementation of this strategy. So once they have this, they will have to implement and move into production these APIs. So now I'm just arriving to the last part of my presentation, which is the roadmap. This is, and I would like to make sure that there are no misunderstandings. This is a preliminary suggestion for an open banking roadmap. This is particularly tailored for the Ukrainian case. So let me walk you through all these items. We are now, and I'm in point number one, doing different open banking industry webinars. Last year in 2020, April 2020, we actually had a first point of contact and approach, and we actually made the first industry webinar with the MBU and some participating banks. A year later, in April 2021, we also pretend to conduct this in May, maybe why not in June. All other stakeholders should be involved in these kind of webinars with different audiences to reinforce these messages about regulation that I have already mentioned, but also about business models. Another thing that we are suggesting to the regulator is to launch an industry webinar. Industry survey. This industry survey has a very important purpose. We need to pulse what are the interest of the different banks in terms of open banking. We also need to know what is the interest of the association in terms of open banking, and also we need to see what are their reactions and why this is important, because we have launched this in other markets and we have realized that coincidentally or not, banking institutions wanted to actually develop open banking strategies. They saw the interest and the benefit of doing so, And the funny thing is that at the end of the day, in one of the answers, we realized that they were willing to get customer data from their competitors. However, they were not willing to share their own customer data, which deals with the fact that I already mentioned, that there is no reciprocity. These came about in this survey. So these are things that are important, because these will allow the regulator and also all the stakeholders to see what are the gaps that needs to be addressed. Another thing that we mentioned is that we need to set up an open banking working group. This has happened in all countries, and Ukraine will be no exception. The sooner we set up this, the better. So this working group should be composed of a variety of stakeholders and also a variety of profiles. In the case of, for example, the regulator, this working group should take into account not only IT people, but also experts in regulation, in supervision, also in understanding the trends of financial innovation technologies. In the case of fintechs, likewise, you need to work out who could be your representatives in this working group. But this is something that needs to be done with all stakeholders. And of course, that includes the banks. Then the MBU should be setting up a framework for open banking. This is something that we are already discussing. And once there is a clear idea of where the regulator wants to go, and again, this is something that should be receiving the inputs from this working group of open banking, then you will be starting the open APIs specifications, at least the V1.0. In parallel, once you finish this, and we are approaching then the end of this year, this calendar year, you will be defining user experience standards. This is something that was not identified earlier in many markets. When it comes to open banking standards, everybody was thinking just about open APIs specifications, but then with the UK experience, the banks realized that there was very little uptake of the different APIs and the applications that are going behind the scenes with these APIs. And the reason why was because these applications, these new use cases, were not easy for the customers to get on board, or were not very well explained or communicated. So these user experience standards try to fill the gap of how best analyze, how best interpret what are the customer needs, putting ourselves in the shoes of the customer. And then, and this would be the third big component of the open API standards, is the operational guidelines. That could take easily at least 3 months to define. In parallel to this, around the last part of Q1, i.e. March 2022, you should also be in a position with the regulator, or maybe just a regulator alone, to define what are the user dispute mechanisms that will be put into play in order to, as I mentioned, realize or define who will be held liable, what are the rights, what are the obligations, and how can we restitute the customer into any harm that he may suffer. Once this is done by the beginning of June, and again, this is very preliminary, we need to really focus on having the setup of the working group as soon as possible in order to kick this off, there will be this open banking directory. This is essentially a directory that will list these third parties that somehow have been going through the due diligence process that the regulator may put into place in order to provide some kind of licensing or permission or authorization for the different fintechs to be held and to be labeled as trusted third parties. Once this is done, by summer, August, the market should be engaging and connecting these third-party providers. In parallel, of course, either you have already developed some market offerings, or if not, you will be most likely developed anytime soon in order to be able to offer something to the market. And if we are lucky and everything goes according to plan, you could be launching and even refining your offering as of Q4 of next year. And in parallel, in Q4 next year, the MBU task force could be set up and implemented in order to provide you with implementation support. This is critical. This is something that is most advisable, that the regulator put in place some kind of task force team that will be supporting the different fintechs, or at least the most small ones. And in parallel to that, there will be some monetary functions from the MBU that will typically deal with the KPIs. So we will help the regulator to set up a number of indicators as a baseline, and we will then track them throughout the course of the launch. And at the end, we will review how was the performance, and how the performance it is not being as planned. How can we actually fix the different gaps between the plan and what happens in reality? And I guess anytime by April 2023, the APIs could be enhanced in terms of functionality. So again, I think we should be realistic. This is a complex project. We should be ambitious but practical, and if we keep it small, we keep it controllable, we keep it with a degree of satisfactions for all parties, there will be most likely no misinterpretation, there will be no frustration, because we will be able to accomplish, I would say, realistic targets. And just a last word for this preliminary roadmap. This has been presented, but this has not been by any means so far approved. I am presuming that these will suffer some changes in terms of dates. Maybe some of these dates might be advanced, some others may be delayed. This is something that, again, will be very much dependent on the regulator resources, capabilities, and also the resources and capabilities of the Ukrainian Banking Association, as well as the FinTech Association. So I think I'm done. I've been speaking, I hope not too fast, for about an hour. And now I'm quite happy to go to the questions and answers. If I can answer them right away, I will do so. If for any reason this requires further research, I will be happy to take, or one of my colleagues will be taking your details, and I will try to provide you with an answer later by next week. So the floor is open for any questions that you may want to ask.
Thank you, Jose, for your so deep intro to open banking. So I will switch to Ukrainian for colleagues. Колеги, задаємо запитання. Там було два запитання. Перше по відео. Так, відео пізніше з'явиться в YouTube-каналі асоціації. Слайди презентації поки що не будуть розсилатися.
Jose, I actually received one question to direct messages. I will read it in Russian and you will hear the translation, okay? По мнению господина Хосе, в какой стране наиболее успешно реализован проект Open Banking и какие критерии успеха?
Okay. Answering the first part of your question, I think most likely the UK is the most successful implementation country jointly with what is happening in Singapore. The reason is twofold. First, those two countries have been dealing with open banking since the earliest stages. First. Second, both countries have an approach which is very interesting. The first one is the UK, where everything was mandated and the standards were defined jointly with the industry. In the case of Singapore, the standards are just guidelines. Quite honestly, I prefer to have a clear vision from the regulator and from the industry in terms of standards, because otherwise, if this is left just as guidelines, this could lead to issues with interoperability, etc. I have to say that in the case of Singapore, when the Monetary Authority of Singapore provides a guideline, this guideline actually becomes a de facto regulation, because every bank in Singapore who is launching open APIs is actually following these guidelines and standards. In other words, this is a bit misleading, because although they pretend not to be a very mandatory authority or regulator, they have such a I would say trust in the market and reputation that everybody and all the industry follows their suggestions. So it's a de facto, these guidelines are a de facto regulation. So this is my first point. The second point, in terms of another key success factor, is that the whole industry has been involved from the very beginning. Again, let me give you examples of what happens in the UK. In the UK, there were public consultations for discussing open API scope. There were public consultations about setting up the standards. There were public consultations about setting up the open banking implementation entity. And the entity is actually funded by the 9 systemic banks that the FCA, the Financial Conduct Authority, which is the UK super regulator, actually defined as the target banks. So in a steering or steer process, I think there are quite big chances of success. Having said that, I think it is important to involve the whole industry, all the stakeholders. Otherwise, this is not going to fly properly, because there will be, you know, hidden interest from different parties, and we need to be super objective. We need to put all the cards up front and then discuss depending on our different interests. And one final thing is the mandate of the regulator. In the case of the UK, this super regulator has, among different mandates, they have to increase competition, which is not usual for a financial services regulator. Financial services regulator tend to focus more on financial stability, inflation control, etc. But in this particular case, the FCA, who is the responsible for open banking regulation, actually has as a mandate to increase competition. That makes a difference. And in the case of Singapore, the mandate is to actually make Singapore a very competitive marketplace for the financial services industry. So this has different approaches, and something that is interesting about this when we compare with what happens, for example, in the continental approach, is that regulators tend to have just this financial stability and inflation control mandate, in which case what happens is that a lot of the definitions about the standards have come from the market. This is the case of the European Union with Berlin Group as the main standard setting body. And this is actually what is happening in the European Union. Much of the innovation is actually coming from the private sector. These are two different approaches. Each of them needs to cater with A, the specifics of the regulator, B, with the specifics of the market. And we shall not forget what is, let's say, the traditions in terms of how you regulate the financial services industry, because you cannot pretend to overhaul, you know, the regulatory approach overnight because of open banking.
I have two more questions. Какая польза open банкинга для e-commerce? For e-commerce. Как его можно использовать, например, во время оплаты при оформлении заказа?
Okay. Open banking provides you know, an API is actually a means to make two IDC instances to be able to talk to each other. So the moment you are implementing open APIs, you're facilitating enormously e-commerce. There are so many examples in the world, and one of the most obvious ones is Amazon. Amazon has APIs for almost everything, not only for payments gateway, but anything related to price comparators, product suggesters, etc., etc. All the underlying connecting technology is all sorts of APIs. So that will answer your first question about, you know, the benefits. Is that it is actually a reality. Open APIs facilitate enormously marketplace exchange, because once you have the standards, you publish that standard, and then anybody can develop any API to facilitate extra services. And let me give you some kind of a vision. In the old days, a market, and you can see that especially on weekends in Kiev or many other cities and little towns across Ukraine. You know, people go, you know, agriculture producers go to the markets, they present their products, and those products are sold physically with, you know, the ladies, usually the ladies going to make their shopping. Today, with the marketplace, with the digital marketplace, what you have is the possibility of increasing the share of wallets, because you are, as one point, you are selling different products, and you're even able to increase upsell capabilities and cross-sell capabilities, because, as I said before, and using again the example of Amazon, people who bought these also bought that. People who you know, saw these also saw those products. So these kind of tools are actually facilitating that the uptake of a marketplace, and the revenue share actually increases due to this technology. This would be answering, I believe, both of the two questions. If it is not the case, please let me know, and I will try to develop further.
We have one more question.
Sure.
Відкриті дані дозволили збільшити прибутки. Якщо більш детально, то наскільки дозволило здешевити сервіси фінансові та знизити операційні видатки? Є така інформація?
Any translation for that?
Shall I repeat?
What?
I mean, could you hear the translation? No? Okay, I will read one more and you can hear the translation. I will read one more time. Відкриті дані дозволили збільшити прибутки. Якщо більш детально, то наскільки дозволило здешевити сервіси фінансові та знизити операційні видатки? Чи є така інформація?
Okay. Let me get back to this slide. I think we're mixing two things. One is data sharing, and that data sharing can have usually the purpose of increasing revenues, because we are providing new services to banks, and those new services are actually facilitating, because the customer sees a value on those new services, they will facilitate the increase of the revenue. This is, let's say, the top line aspect of open banking. But as I said before, when you use internal APIs, and this is a classical example with open API marketplaces that are being used by single companies or closed user groups. Those open APIs can range from existing departmental APIs that are being produced by a multidisciplinary team that facilitates the implementation of process automation. If we have processes away from paper and becoming more digital, we will have a steep increase in our efficiency and efficacy of those processes. These can lead to reduce of cost easily in the range of 35 to 50%. But obviously that comes with an investment. The other aspect is that these intra APIs okay that we are using only within the same financial institution can be also open to external partners. So this is something that is actually what Open API is about, that you as a fintech provide either services that are designed for end users, in which case this is an increase of revenues because you're offering, for example, some kind of comparator of mortgages or credits, etc. So it's for the benefit of the customer, and there will be some revenues involved there, or at least some revenue share involved. And we will talk about it tomorrow in the business models discussion. But we also have the facilitation of increasing our efficiency, because you as fintech are suggesting artificial intelligence solutions, because you're facilitating or outsourcing through an API all sorts of data set that you are analyzing with your data scientist, because maybe the financial institution is too small and do not have the resources to be able to analyze transaction data. And then you can come with very interesting insights that can help the marketing department of that financial institution to be more precise in the targeting of their customers, or to be able to cross-sell when they open a bank account, the customer opens a bank account, to be able to cross-sell to, for example, a credit card or some kind of, or let's say, line of credit if they're an SME, or a consumer credit if they're a consumer segment. So again, the Open API has two sides of the same coin. It can either increase the efficiency, i.e. reduce cost, and any cost reduction is de facto an increase of my revenues, or I can increase my top line because I am cross-selling or upselling products, existing products, or even I am offering products that were not part of my business portfolio before, and you as fintech are providing these services.
Okay, we have one more question. What is the role of Open Banking Europe, OBE, in UK, Europe?
The role of the OBE in the UK is the implementation. OBE stands for Open Banking Implementation Entity. The implementation entity is actually doing everything. They took part in the standard settings, and they took part in rolling out the open APIs in these 9 mandated banks. And once they are launched and up and running, all these APIs, this implementation entity is the one who supervises that the implementation is being smooth, that there are no issues. If there are issues, they are the one who address them. They are the ones who try to resolve any dispute between the stakeholders, etc. So at the end of the day, it is, simply put, a one-stop shop for everything that relates with implementation of open banking in the United Kingdom. A similar role, although not exactly the same, has been put in the hands of the EBA, the European EBA, the European Banking Association, who is supervising the implementation throughout Europe. But obviously it's not the same to oversee what's going on in 6,000 banks across 27 countries that what is happening with just one country, which is the UK, with just as little as 9 banks. And again, the perimeter of responsibilities is not the same because, for example, the standard settings are being dealt with by usually this Berlin group, because the PSD2 directive does not mandate any particular standard or any particular technology. They talk about APIs, of course, but they were not defined. So one of the things that has been done, as you may know, by the Berlin group is actually to define what was going to be the standards for the 27 EU countries.
Thank you. And I have one more question for you. So what do you think top three pitfalls that we should avoid at the beginning of starting this open banking movement?
Mm-hmm. Very interesting question. I think I have mentioned some of them when we talk. Let me just try to get to this suggested roadmap. The first thing is not being realistic. That's a classical pitfall. And this is happening all the time. Everybody is very anxious. Everybody is very anxious. They want to implement this. And I think the first thing is that there is no clear vision, okay, about what do we want to accomplish with open banking. And this is something that is actually something that is very important for the financial institutions. Is what is my, and let me get back to this, what is my open banking strategy? They need to define that. If there is no open banking strategy, you as fintechs can or may have some limitations to interact with banks because they don't know what to do with the services that that you guys can offer them. So this is critical to have an open banking strategy, either for financial institutions or you as fintechs. The other one is related to being not realistic, and by being not realistic is that stakeholders in general see that this is something that can be useful. You see that this is a trend worldwide, so this is something that you want to implement as quick as possible. And obviously that really depends on how many resources you have and how much money you can count on, the way you can finance this, etc. So this pitfall deals with many other aspects, but in general, my suggestion would be, please be realistic, be as much down to earth as possible, and try to challenge any ambitious deadline that nobody is going to be able to accomplish, because then it will be very frustrating. So that could be my, let's say, pitfall number 2. And my pitfall number 3 is that you don't work together. So open banking is something where the regulator needs to orchestrate an enabling regulation. But you, as market participants, jointly with the banking industry, are the ones who, jointly with the consumers, will benefit most. Which means that somehow you as fintech needs to listen to the customers to see what are the things that they really want. And banks and fintechs needs to work together in order to be able to provide those services that the customers are demanding or the banks are demanding, because fintech, again, is not only about end user, because many customers of fintech industry are actually the financial institutions, because you are making them more efficient. So if you don't talk together, if you don't agree on the standards, if you don't set up this working group and work together openly, honestly, then this is not going to work as smoothly as it should be. There is, this is a final remark, there is a lot that institutions like IFC needs to do with these webinars, not only for the fintech, we also did this for the MBU. I think we need to reinforce this with the participating or possibly participating banks in the future. And again, this is a joint effort. So this is the bottom line of the third pitfall. If we don't work together, this is very difficult to implement. And maybe you need to leave on our shoulders the burden to convince that this is good for the whole country, this is good for the consumers, this is good for the industry as a whole. And the banks should not do this because they're mandated, but rather because they believe that there is something to win. And quite honestly, this is, if you allow me, a risk that we need to overcome, because sometimes banks don't see the benefit of this when they, start to dig into, okay, but if I open, my customer data, I'm going to lose them all against my competitors. Well, this is one way to see. The other is, rather than looking at that risk, banks should focus on what are the opportunities. But again, this is things like which are totally out of our control. These are things related to management styles, communications, enabling regulatory environment, a banking industry who is willing to embrace innovation, etc., etc. But these are, let's say, out of the control of the FinTech Association, and of course, out of our control too. Anything else?
Yes, we have two more questions. The first one, are there any figures how open API implementation boosts the financial market of Europe or other countries? Any forecast for Ukraine?
Okay. Answering the last question first, I don't have any data for the Ukrainian market in terms of what would be the economical implication of the implementation of open banking. I believe this is something that either the association, and I will, push back this question to Rastislav, whether the UAFIC has something about this, or whether the Banking Association of Ukraine has some figures about this. So I guess of course we can try to help you out in order to get this data, but I would presume that the three most likely stakeholders to have, these Ukrainian projections would either be the National Bank of Ukraine, the Associations of Bank of Ukraine, or the FinTech Association. Any of these three should have this. If not, I can see, and I can take the commitment from my side, I will see if World Bank has any particular publication or any particular figures on Ukraine open banking impact. I'm writing this down in order to see what I can do from my side. But from the Ukrainian side, I would suggest that at least from your association, you guys try to see if you don't have the data to get it from the Association of Banks or from the MBU. Again, if you don't feel comfortable, we are also quite happy to get this data on your behalf. Just let us know. That would be the second question, and that's my answer. Regarding the first question, do we have a specific data? I don't have that data in my head. I know that both the EBA, the European Banking Association, and the OBA in the UK and the FCA as a regulator publish some reports that I can again try to get for you, and then I can send it to Rostislav for further dissemination. Having said that, bear in mind that open banking has been relatively new. In the UK, it has been slightly older, but in continental Europe, this is something that has been up and running for 2-3 years since it was a mandatory implementation, if I'm not too mistaken, back in 2018, after a 2-year grace period. And obviously, the data points are hard to interpret so far in the European context, because this is a quite recent initiative. So even if we have the data, I would advise you to be super cautious, because again, if we don't have a long time series and we just focus on the early starts of any industry, and at the end of the day, the open banking opens up a whole new industry in the financial sector, I believe we need to be cautious, because obviously the take-up might not be up to expectations, and we cannot say, okay, you know, these figures are so poor that this is not worth pursuing. I wouldn't look at from that angle, but rather see, okay, this is just starting, and these are the figures, and the interpretations of the figures from the industry and the regulators is that these gaps still exist, and these gaps still needs to be addressed. Let me give you one gap that I know for sure exists, at least in continental Europe. Since there are 6,000 mandated banks, what many banks have done is they have opened, you know, basic account data sharing APIs and payment initiation APIs, because they are being mandated to do so, but with little to no promotion whatsoever. Obviously, that's not the way to go, but this is a reality. Why is that the case? Well, maybe I can hypothesize this could be because A, those banks do not have any interest, B, because those banks do not have the necessary resources to go any farther to, you know, to promote these APIs in a more active manner. Again, we're talking about 27 countries with different degrees of maturity. And this is not to forget about pitfalls. This is more a warning. There is a lot of, I would say, customer education to be developed in order to show customers that open banking is a positive value proposition. Now I'm saying this because maybe people might be wary of you know, having to provide consent to an API in order to get access to you know, personal account information. So this is probably one of the biggest challenges that we need to take into account. And this can only be overcome with a very strong communication process, also with a very strong, let's say, financial literacy programs. And obviously, the first ones who will be, you know, accepting this change of a paradigm in the financial services industry will, of course, be the millennials and the digitally native customers who are willing to experiment with this, but you cannot pretend to get consent of a 60 or 70 years old person because they will be usually very reluctant to do this.
Okay, one more question. It will be with translation. А можно конкретные примеры успешных банков, хотя бы название банков, например, того же UK или Сингапур, которые изменили свою бизнес-модель под рынок Open Banking?
Okay. I think let me invite this person who actually has asked this very question. Let me invite he or she to be tomorrow in the webinar, because I will be dealing with this specific question tomorrow. And I prefer to answer it tomorrow and not to anticipate that answer. I will be dealing with business models and what has been successful cases in the marketplace in continental Europe and in the UK mainly.
Okay, Jose, we received thanks, and that person will attend your webinar tomorrow.
Okay.
So-
Benny, I'm not avoiding the question. I will for sure answer it tomorrow. If by any chance I do not, well, there are a few slides that are actually addressing that question. I have a matrix where I depict the most successful cases of open banking.
Okay, if no more question at the moment, Jose, thank you very much for so deep intro for open banking. I think tomorrow we will have continuous this interesting story about open banking, especially in part of how to earn money on this, which business model are more practical and give more money. So I think all our participants will be interested in this. Also, so colleagues, thank you for your time, and ask everybody to fill the questionnaires that was in general chat, couple questions early, and see you tomorrow. Jose, thank you. Colleagues, thank you very much for today.
Not at all. My pleasure. Goodbye to all.
Thank you very much, Jose.
All right.